Good morning, YouTube. Bennett Tyndall with TradingAnalysis.com. Today is Wednesday, May 20th, 2020. Guys, can you believe we are approaching the halfway point through the year 2020? Pretty incredible. This year has gone by very fast, and you kind of add the COVID situation and the stay-at-home orders to that, and it's just kind of the past few months have just felt like one long kind of weird weekend. But guys, the market continues to perform very well. Obviously, nobody's interested in fighting the Fed. We continue to kind of juggle a price level in the S&P. The NASDAQ is nearly back to the old all-time highs. It's pretty much erased the damage that was done from the February to March sell-off. So it's been a very interesting kind of disconnect and change in the market, and where we're seeing the kind of continual divide between the haves and the have-nots. And that's becoming quite evident in the NASDAQ 100. So, guys, let's go ahead and bring in the team. Good morning, Terry. Good morning, Alex. How are you guys doing today?
Hey, Bennett.
Good morning, guys.
What's happening?
Oh, just another beautiful spring day.
It is.
One question, Bennett.
Yeah.
I see on this YouTube, at least on my part, I don't see a chat is enabled. Do you see people posting?
Yes, says the chat is disabled in the live stream.
Well, that's no fun.
Is there a button you can push?
Yeah, I'm looking into that now. You guys carry on and fill the gap while I see what's happening here.
Well, I was seeing pre-market futures are up again today, another 1.15% for the Dow. 1% for the NASDAQ, 1.15% for the S&P. It's, we still got 40 minutes until the market open here, but yesterday, I guess Monday was a big day, right? Monday was a big day. Yesterday was a bit of a down day, and pre-market looks like we've got another push higher. I know you're going to talk about a gap filled in the NDX. But yeah, it's crazy what this market is. It just doesn't want to roll over.
Yep, not at all.
It's not yet.
Chat should be enabled.
Yeah, it's struggling. Let's take a look here. Chat. May have to refresh my YouTube video page here.
It's a really rather interesting place that we find ourselves in the market, right? Like everybody who did sell through the February to March decline and is now looking at this 30% plus rally back. I think just every single dip that we've seen has been, in their eyes, a buying opportunity as we continue to see this kind of shift and divide, which is the chat good to go? Anybody?
Yeah, the chat's
okay,
good.
Good.
You can continue, fearless leader.
Just wanted to make sure. All right, guys. So
yeah, I can see only two of us there.
Okay, yeah, probably people were a little confused since it wasn't.
Yeah, everybody needs to press refresh, F5, or refresh your browser window, and I think the chat will pop up.
Yep. It should. That's the goal, at least. So, we've got this situation where everybody who kind of sold into that low and is now sitting on a lot of cash, I think they're still a little bit undecided in the kind of outlook for the market, right? Like guidance for the next couple of quarters, discount rates, earnings, even, you take a look at Apple suspended guidance going into the next quarter. So I think although we do have this significant outperformance of the kind of key weighted names, especially in the NASDAQ 100, there's a lot of the market that isn't functioning and still has a lot of technical damage that's been done. So in the event we do see some of these kind of market leading names roll over, where does that take the indexes? And what's interesting is, looking at potential forecasted earnings growth for the remainder of 2020, things get a little more interesting. And, what's going to carry this market back to the old highs in the S&P? The NASDAQ's almost there. I mean, is this simply going to be a case of multiple expansion, kind of similar to what we saw off the December 2018 lows? So, we're approaching a kind of technically overbought condition. So I think it's difficult to have conviction on allocating equities to the upside here. I think it's even difficult to have conviction executing trades to the upside in this kind of
Yeah,
condition and
I think
environment.
though it has a lot to do with the composition of the index that you're following, right?
Yep.
So, and you know, in the S&P 500 has got a large collection of those sectors that are in lagging positions, right? And the Nasdaq or the NDX does not. The index Nasdaq 100 has a very limited amount of those stocks. So you know we've been saying it's a market of stocks. So you know pick and choose. There are some high flyers that are already broken out beyond their pre-downturn highs, pre-March drop highs, right? So they're out there, but you got to go spend a little bit of time and effort searching for quality stocks to put your money in, and that's what these hedge fund investors, you know, they're struggling with because they juggle such large portfolios. They have this long-term vision, and you know, they're not speculative traders. They're there to invest for the long run, and so their motivation is a bit different than swing trading. So they don't rotate in and out as fast as you know, like we would. We would pick a certain batch of stocks to jump in and out of all the time. So
Exactly, and that just kind of goes back to your point that you brought up, you know, over a month ago, and that we are seeing that divide, and you really need to be, if you are going to be investing in this market, spending the time to find the stocks that are performing. And heck, we've seen stocks that have benefited obviously from this stay-at-home situation. You know, you take a look at Scott's Miracle-Gro. That's a stock that you wouldn't really expect to be in the kind of stay-at-home basket of stocks and portfolio, but it's performed remarkably well. It's seen an incredible run, you know, following the most recent lows there in February and March. So I'm really curious to see where this takes us from the, you know, longer term perspective. We're still juggling a couple of different counts, which suggest that this could still very well be some sort of a counter trend rally back in some sort of a B wave. It's becoming increasingly less likely that this is the case. Todd pointed this out a few weeks back. We had 2 or 3 Elliottwave counts which supported the March 23rd low as being the end of the correction, where we only had...
Zoom in on that a bit, if you wouldn't mind.
Where we only had like one... No, you're good. Where we only had like one count, which was really technically valid and followed the rules and the guidelines, which did support additional downside, and that's the count that you're looking at here. You know, this is something that could still very well unfold. I think the markets, the Nasdaq, we're nearly back to the highs. The S&P, as Terry and I were discussing with Alex before the stream, is up against a zone that we need to get through. Anything specific you were looking at on this particular chart, Terry?
Well, Joe had a comment about the S&P could be in another ABC up, which I think this is your yellow count is that wave count, and he says we're in a B wave flat right now. So I wondered if you might drop down into smaller time frame and take a closer look at that B wave flat. Yeah, we're talking about that blue ABC there. So that's a nice good decomposition. And if you decompose that internally and take a look at it, and then Alex can give his expert opinion on the patterns that he's seeing there. But it looks to me like we've got you had A there. And then, so either it's this large of an ABC or C is over, and we were already moving higher from here, because that gap up could be a hint. That large opening gap there yesterday or 2 days ago might be a hint.
Yeah, and you know, this just kind of goes back to it's really rather interesting. So the 618 retracement in the S&P 500, we tested it. We had a 4 or 5.5% correction to the downside. We retraced, we retested it. We had another 6 or so % correction to the downside. Over the weekend, we had kind of 3 headlines which carried us into that futures gap, and then of course the subsequent open Monday morning. We had crude oil. Crude oil continues to push through the 30 handle. In fact, this is, I don't know where it went. We had a chart that we were looking at with you guys last week, in crude oil, which we'll look at that later, but that continues to act well. You add to that the talk of additional stimulus, and then of course we had the announcement on the preliminary phase 1 data as to the COVID vaccine that Moderna is working on. So it just kind of goes to show you that we're in kind of this trend in which we've been essentially sideways, since April 17th, in some sort of form of consolidation. I think a nice, clear, decisive break through this level will give us some more clarity as to if this B wave is in fact over. If you get down to the substructure on this, you could account for this impulsive trend as C of a B wave. You could very well anchor your wave 2 back here. That would be a very, very shallow wave 2, and I believe it would even represent a smaller net percent retracement than its smaller degree counterpart there. And then the alternative substructure is the idea that we're just coming out of a wave 4, because taking Elliottwave and just kind of putting it aside, what do you see here? What do you guys see here? I see, at this point, a 3-wave move now into consolidation. This could very well be a 4th wave that we're coming out of, which we started on Monday. Alex, what do you think?
You got a period of you've got high resistance level there, a strong resistance to moving higher at that 2960 level, and that's what we need to punch through to clear the road higher. And yeah, we've been stuck in this range for nearly a month now.
Yep, absolutely. So if you guys, we've been getting a lot of messages from clients saying, hey, I missed the low here. I've been scaling in on the equity side. Is this the start of a third of a third of a third, and we're just exploding to the upside? I think we need to see a larger correction, and let me just take this back to the idea that this is the March 23rd low, representing a C wave of a wave 4 flat. Okay, so let's get you over to the weekly really quick. And for those who are looking at that as a possibility, we often see, especially with this extended third, right? We have a beautifully extended third wave right into your 161.8% Fibonacci extension of your wave 1. Taking into consideration the angle of attack, as I like to call it, being an aviator, or angle of ascent of the wave 1, you often see wave 5 demonstrating equality to wave 1 in both duration and magnitude. So if I were to just simply take into consideration the angle of ascent of that wave 1 from that possible March 23rd low, we are in such an aggressive ascent that it's very difficult to have conviction on any equities entries at this particular level in the indexes. So I'd like to see a larger correction. I'd love to see a 3-wave move confirm some sort of an initial motive impulsive trend here, which will put us back into that higher degree uptrend. So what do you guys think? Don't fight the Fed.
Chart of the NASDAQ. Yeah, pop a chart of the NASDAQ up there, because now this is the other side of the equation. So we've had all of this, and I know you didn't throw it up there, and we don't need to go back, but the 200-day moving average, we've got to get above the 50-day moving average in the S&P, and we're struggling. We've got a support level there. Maybe I'll show it on one of my charts. But on the NASDAQ, we've clearly pushed higher, and so you don't see that same period of sideways consolidation. You clearly, in this last 30 days worth of trading, that we saw sideways movement and a range bound in the S&P. What do you see here in the NASDAQ? Just continued impulsive behavior.
Yep.
NDX, I'm sorry, NASDAQ NDX. We use that interchangeably, but we're only talking about the NASDAQ 100. So.
Yeah, we're not talking about NASDAQ Composite.
Not the composite, yeah.
It's incredible to think that we've essentially erased all of the damage, the technical damage that was done there.
We filled this gap, yeah. So one of our clients pointed out, yesterday or the day before, that there was a gap that needed to be filled in the NDX, and it looks like it's been filled, but we need to penetrate higher above that too. So That's what we're talking about right there. You might want to zoom in a little bit more, Bennett, so it's a little more clear.
Yeah, absolutely.
There we go. So we're testing that gap. What do you think about that, Alex?
Well, if you go back to S&P chart, I will comment I think it's the as more as we consume time and we are seeing that more economies are slowly opening and the pandemic is kind of a trying to enter into descending stage. It is undeniable that this might be also very well a wave one of the subsequent rise for the new high. I will definitely expect a corrective pullback in the wave two. I don't think we will get a third of a third for now because I see clearly a possibility that we are in a possibly fourth wave. Maybe we're going to test this 200 move average. I will also put on your wave count, yeah, something like that, and then maybe my target will be more aligned with 38.2. So 3000, 3020, 60, and then we go in a pullback. So my orange one from your 618 will be a little bit less lower on this positive note, and I think we are going to see some pullback to the downside. But anyhow, to pair that with all of this, what is going on, it's as you said, really incredible what we are doing because this is a clearly disconnect with the real data, as we said in the last few sessions. But Jerome Powell in 60 Minutes was very clear. I was listening his interview, and he said the Fed basically is unlimited.
Yeah, unstoppable.
Yeah. So I mean, they're acting on a Congress behalf, and they still have ammunition in the backyard, even to throw more of the stimulus in this market. And actually, from the fiscal side, we are talking from the Democrats with another 3 trillion put from the fiscal side from Congress. So, I mean, with all of these supports in the economy, I think the timing is crucial. And as I said, if these things to be more prolonged in a sense of a supply chain and on the profits of the companies, because many of them has no any real revenues. If we start to see unlocking of the economies very soon, then this market was right, and we are going to go higher. The bond market actually does not agree for now. We are still trading in a possibility we are going to see one more move down in yields, which might be that second wave. And if that pairs up and economy starts to open, yeah, I think we can anchor this wave two and then look higher in the next weeks or months after this wave two finishes. So we really need to watch what is going on with the supply chain and the company results. If we get any of the openings, I think the optimism and liquidity which is thrown at this market will fuel the further buying after this pullback. So flat in a wave four, that's more and more looks like that, and we need to adjust. Especially my outlook, I was more bearish, but markets is saying differently, and I think I need to comply to that. What the market is telling us.
Yep, absolutely,
So
very well.
same on Nasdaq. I mean, if you look the rise up, it's really even. I mean, even if you saw the last 2 days when we had this quarrel between the Qualcomm and Huawei, where the United States actually dropped the chip supply to Huawei. I mean, it's incredible. The markets just flushed that off in next day. I mean, and I think we are in a serious potential trouble between the States and the China, further tightening on the trade war and on the internal relation between them because of the COVID crisis. We will, I think, see that in the next few months. We are also in election year, so if you look from the perspective what have been thrown with the most severe crisis we know in the last 100 years on this market, and it's still going up, I don't know what to say. I mean, you have to surrender, you know. You have to say, I mean, this is something really, really incredible if you look from that perspective.
It's true. We're in kind of a better safe than sorry. I'd rather be on board and wrong than not on board at all. Kind of a market.
Yeah, but I mean, if you look all of the stuff, you know, I mean, you have a COVID crisis which completely stopped the economy. You have a trade war. You have another additional quarrel. Isn't that enough?
Don't forget the oil.
Yeah, I was going to say
oil
Saudi Arabia,
you know,
Russia.
You have, I mean, so many things have been thrown to this market, and it keeps going up. And really, you have to question yourself. Usually, in the past, when such events happened, that will definitely produce a real correction. But if this is all, and it seems like it is, I mean, heads down, you know. So to sustain all of this and market is still pushing higher, for me, that's really a kind of a wonderland, Disney wonderland thing, you know. So it's really, I mean, I'm just watching, and I still cannot believe that market is so resilient, and it's just keeping pushing higher. So
yeah, yep.
I have to comply, you know.
It would just be nice if you could give everybody a little bit of a pullback, you know, to get some higher conviction setups going on here. And back to what Terry mentioned, here's that 200-day moving average that sits just above price action.
Yeah,
usually, but the Nasdaq's sitting above its 200.
Yeah,
and the S&P is below it. So that's the and again, it all goes back to the composition of what's in that index.
Yeah, you know, about that 200 moving average, as you can see, we sometimes can go over and below it for some degree, you know. But as long as the price gravitate in a near proximity with this 200 moving average, you can maybe sense the hesitation of the market. We might punch through it to this 38% or maybe even a little bit higher, but we'll definitely, I think, gonna test that on the downside and maybe go to this your green wave C and do a small or a little bit bigger pullback in this orange wave too. But I don't think we are actually going straight up from here. I mean, from maybe I'm too conservative, but I think we are due for some type of a pullback soon.
I agree. It's ridiculous. I mean, we were just looking at the angle of ascent of the wave one of the same degree, and it's just such an obnoxious kind of angle of ascent here. Here's an instrument ratio where you can clearly see the underperformance of the S&P as compared to the NASDAQ 100.
Yeah, amazing, amazing,
incredible.
Yeah,
so
amazing. Can you just squeeze that chart so I can see a little bit more data on that?
Yeah, certainly.
No, just squeeze it.
Other way.
Yeah, other way.
More.
What are you looking for?
Oh my God! No, I wanted to see this instrument overlay.
Oh, gotcha.
History,
yeah. Let's pop off to the weekly chart here, and it got rid of it. So here,
it's actually go back from even beginning of the year, and the S&P starts to drop in related to Nasdaq.
Yeah, this is. So here's back in September of 18.
Yeah, 18, and then we go down. Amazing.
Yep.
The question is, I mean, if we are considering a bullish scenario, we are looking at on the higher time frames of as the green wave 5.
Yep.
So if we go successfully out of this crisis, then what is going to be in front if we are looking for just one more push on the upside? That's a really interesting question. We will discuss that in the future, but Elliottwave model suggests us that potentially we are in the last move on the upside. So that will be an interesting subject, really.
Yep. And if this is that higher degree fifth of an even higher degree fifth wave completion in the S&P specifically, and this is green wave 5, looking for 4,000 in the S&P, it would make sense that we see some sort of a correction here to cool off before getting on board for that wave 3. So
exactly.
Until we get that, I think the market's going to continue to be challenging.
Yeah, so basically we can formulate our stance that we are still on guard against the possible backdrop, but this backdrop to lower lows or testing the previous lows are becoming less and less likely.
Yep.
As we see it.
All right, guys, should we transition into some sector rotation, or do you guys want to go macro first?
Yeah, whatever you like, guys. So for me.
So just before we move on, here's that consolidation that we were looking at in oil last Wednesday in that possible fourth wave position. And you can see this beautiful break right into the upper end of that trend channel. So who's up? Terry, you want to take it, sir?
All right, real quick.
Coming your direction.
Weekly. Here is the performance for the last 2 days, and this is that band that we've been talking about in the S&P. This is a 50-day moving average. This is a 200-day moving average. Really want to see this push higher, so that's what I was just showing here. But data I've got over here on the left is really, this is Monday and then this is Tuesday. So Monday and Tuesday's movement here in the market. We had 9 of the 11 sectors with positive push, even though we did give back a little bit yesterday. The S&P sectors, we still have healthcare in the lead, just slightly over technology in terms of relative strength. Interesting here this week, which is only 2 days, right? So, but we saw that we saw technology bounce off of the border, moving into the weakening and start to push itself back higher. This week it's kind of reversing again, but the data for this week is not completely over. What I am seeing though is this nice hooks here in industrials and financials are possibly giving us an early indication that we've definitely seen a major shift in the market in sector rotation. What we've got now, look here at healthcare declining in momentum. Still got strong relative strength ratio, but momentum is moving down, and so is staples. So staples has got a dramatic downturn and is now pushing itself out of the leading quadrant. Soon it will be down into the weakening quadrant and potentially give the market back to other up-and-comers, which I see are in the communication sector and even back in the consumer discretionary, which is now bounced. Consumer discretionary has now pushed itself back up into the leading quadrant. Over here in Insight Improving is materials sector. So it doesn't quite have the relative strength ratio comparison, but it's got a nice momentum and a nice up angle here, northeasterly, should continue higher. Let's jump in here. I want to take a look at this is the healthcare. This is healthcare top 20 compared to the S&P, and we've got a nice collection here of all these healthcare stocks, all in the leading quadrant, almost nobody down here in the lagging, but almost all of them are losing momentum. Look at all of these arrows, all of the vectors with the exception of a few that were coming out of the lagging quadrant late, some late up-and-comers here. But all of these guys are now dramatically losing momentum, and maybe this is part of that sign of that stall in the market that we've seen. This sideways movement, typically that just means downward momentum. I want to bring your attention here to a subgroup that's inside of the healthcare sector, and this is the biotech group. So all the news about Moderna coming out with very positive results on some early human trials with some antibody research, Regeneron, Gilead, all of these guys. Look here, look at, well, you can't even hear. I wonder why that is. Look where Moderna is. Moderna was running up back, say, right at the end of March, neck and neck, along with Regeneron, right, and Gilead, and then it basically started outpacing these guys and pushing even higher. So even though we only got the news from this just recently, this stock, the investment and the price run up in Moderna started much earlier than just a few days ago. And look, it shot so far off my scale, I got to keep shrinking it to bring it back. 163 on the strength ratio. So that's how far out to the right it is. Well, this guy is definitely if I bring the price chart up, good Lord, look at this. Look at that. Definitely due for a pullback, I would say.
Just a little parabolic.
This is on a log scale, guys. That's a weekly chart. Let's pull it down to the daily. Come on, there we go. Here's our daily chart. Good Lord. But this also kind of tells you, when the stocks break out above their 200 and their 50-day moving average gets above the 200-day, you're usually going to see a strength in the market here. A little bit of test here. This is February 25th. This is when the market rolled over, right? February 18th, right? That period. And ever since then, this guy's just never looked back. Incredible. But yeah, one of our clients brought up, the fact that this particular subgroup has been ignored for so many years. I know Todd Gordon hated the IBB and the biotechs because they were just underperforming. Now we're in a period of time where these guys are seriously outperforming many other stocks. Let's jump over to technology real quick, and I'm going to take you into the tech stocks compared to the XLK, right? So if you already got the XLK as a leading sector, who are those leaders, right? It's NVIDIA, Microsoft, PayPal, Oracle, although we are starting to see some declining momentum in a couple of these stocks. Apple continues to come up, but it's losing a bit of relative strength now. Its momentum is still in the weakening quadrant, losing a bit of relative strength, but still gaining some momentum, right? So technology kind of not playing a huge game with us right now. Staples.
PayPal and NVIDIA, those are two stocks that are at new, fresh, all-time highs.
Yeah, definitely. Here's a chart of NVIDIA. And its prior all-time high on February 18th before we started this mess was 313, and now it's up to 352. So yes, it traveled a long way down to 180, and it's doubled since then. It's doubled from 180 to nearly 360. Isn't that insane?
Oh, so just par for the course, apparently.
Rode through this, right? So I mean, it's always nice to say that sell at the highs and buy at the lows and sell at the highs again. Well, if you think of that, then maybe you need to think about trimming some of your position in NVIDIA. We do think everything is due for correction. You don't see any straight lines here. There's movement up and down, and we count our wave counts here. Possibly this is 1, 2, 3, 4, and maybe we're pushing up into a 5, and we're going to be due for another pullback here soon. So that's I'll leave leave all that Elliott stuff to the motive wave, and Bennett can take a look at that. One more thing here, we'll take a look inside communications. So yeah, communications in itself is up and coming. Here it is, right here in the relative strength is 102. Momentum is climbing inside the XLC. It's not everything inside the XLC. A lot of the stuff inside XLC is especially these broadcasters, right? Fox Discovery and Viacom, CBS Viacom merger. These guys are all in the lagging, right? Here's Disney. Disney's got that overhead theme park. The biggest difference between Disney and Netflix is Netflix doesn't have the theme park, right? So it doesn't have all that overhang, right? So Disney's got all that night's production material, and that's maybe what's holding it up a bit. Maybe it's time to think about buying back into, picking up Disney for the long haul. Because I think we're going to come back out of this. So that's, Disney had a hard road down since, even since December, it started rolling over. So by February 18th, it actually was not making a new high when the overall market rolled over. So it was already struggling a little bit, and the COVID pandemic just made matters worse. But I am seeing some positive movement here, definitely some constructive rebuild in Disney. Several of these stocks that are in the leadership position. Again, this is comparing to the XLC, not comparing it to the S&P. We'll look at that chart if you want to. But, a little bit of rotation, downward momentum in these guys. Who's up and coming potentially? Facebook and Google. Really not seeing a lot there. Here's the weekly rotation. Just give you a little bit of an animation there. And I'm about to lose my voice, sound like, excuse me. But Facebook is pushing high. Charter, Verizon, EA, T-Mobile, everybody's losing momentum. But relative strength is strong, right? So the angle is just down. It's not down and to the left. So the angle down means it's going to hang on to relative strength. I think you're going to see these stocks continue to remain in leadership position over the next several weeks. So let me give it back to you, Bennett.
Very good. Alex, we'll go ahead and make you presenter here. Did you end up closing the remainder of your Netflix position?
Are you talking about me?
Yeah.
Oh yeah.
Yeah.
That was a big win. We went in on the credit and we closed on a credit. That's an amazing trade.
Yeah, that was pretty remarkable. The entry was a $5 credit. First exit was like a $33 credit, and the second exit was around a $13 credit. So, gosh,
I think I got out about 25. Yeah.
Oh darn, right? Like 2 exits for a credit, or an entry for a credit and an exit for a credit. How can you beat it?
Yeah, we got to find more of those trades.
All right, Alex, you are up, sir. The floor is yours. Take it away.
Thank you, Bennett. So let's do a little bit of macro overview, and let's get you some charts on cryptos and on Forex. So we are for some time on the stance that dollar should go lower, and for now, as long as we hold this 103.81, we are going to keep this this outlook for the dollar. Although we are in a pretty, for now, deflationary scenario, so the big macro question is, are this all of the liquidity which comes into the system and spills over the economy will actually, on the end, produce some of the inflation into the system, or we are going to be in a year or two in a drawn out catching up economy, crippling, and we're gonna still became, for at least time being, very deflationary, which is dollar positive. So provided the data and the liquidity for now that the Fed also issued on the offshore dollar markets, we didn't see actually a rise in a price of the dollar. And as long as the crisis is coming slower, and we are seeing the equities is going up and dollar is moving down, obviously they are kind of correlated in various instances. So I'm still going to be bearish for a dollar. I will expect some push on the upside while the S&P corrects, but the overall outlook for me is more and more, when I see the other charts on some FX pairs, is going to become dollar negative for at least for some time. Going to the smaller time frame, I'm still gonna allow that this might be a little bit of either a flat for another push on the upside here, or this is all of the Y wave or a flat. So this will be a 335 on the smaller time frame. We completed the wave 2, and we are doing now actually the first wave in the third wave for the downside. So for me, either from here or a little bit more upside, I will be looking to put some trades against the dollar, because I didn't see even in this type of event dollar screaming higher. And as you know, I'm looking also the EEM markets, and I will show you these charts. So all of these charts are telling to me that the days for the dollar are numbered in a sense of the strength. And I think also globally the dollar relief rally to the downside will be very good also for United States and for the rest of the world. So let's see some other stuff. As we know, oil is going up, so we can also look from the perspective either this C wave is over on this some type of a triangle, or we are going to see another B wave on the push to the downside. I'm thinking less and less, looking the recovery, which is in 5 waves, that we are going to face this type of the event. On the June futures, which are closed yesterday, I think, or the last week, we didn't see the same negative readings on the oil. I also read that China actually bought enormous amounts of oil, which are now going into the Chinese ports for very cheap prices. I don't know the number, but it's huge number of tankers is going toward China to
As
deliver
long as
that
they've got
oil.
storage for it. Yeah, they're
Yeah,
gonna enjoy some cheap energy for quite a while. But if they run it through their refineries, then they'll end up flooding the market locally with refined products. So that's catch-22 there. They can't really ramp up until the demand for their refined products gets ramped back up too. So it's tricky to unwind all this.
yeah, but the fact is that the price of oil is still nicely at 32-ish, a little bit maybe together a little bit more today, and I'm expecting a pullback. The only option stays if this is some type of a 5-wave move and this is a big flat and we finish lower. But as I said, as I see dollar kind of going sideways and oil pushing up, which also have a correlation between themselves, since not just all flows in the oil is in dollars anymore, because China greatly bypassed the dollar oil standard oil system, and also Iran and Russia. But I think it's still 60-70% of the oil flow is still valued and transact in dollars. So I will look also for a pullback, which will also correspond to the S&P price, and then a further continuation to the upside. So evidence amounts that actually we had this C wave here as a low on this wave count. So this will be some type either of ABC, triangle X ABC. So we are done, and we are going to continue higher in oil, and I'm looking more and more positive for the oil movement on the upside after the correction. If we look also some of the currencies which I'm tracking for our members, I have been following this chart for quite some time now, and this depicts that euro is actually going to go higher. I'm waiting still more evidence, but for now, this will be an A, B ending diagonal in a C wave, an expanding one. We didn't actually broke this wave 2 highs, which didn't invalidate this expanding diagonal. We held this 786 quite successfully. We broke it just an inch, which was a Macron gap from the election a few years back. You didn't see it here. So on the smaller time frame, you can see that we held this 786. This can be very well a running flat. So we have some type of a 5-wave move down in A, up in B, and then down in C in 5 waves. So we are kind of just starting to develop here a potential some type of a wave of the one of the possible green wave 3. This is still not locked in because we really need to make a nice still nice move on the upside to really start to think bullish and put some trades on. But for now, I'm looking this as a possibility that we are going to develop in 5 waves here a higher degree wave 1 soon, and that will also is going to tell me that we are going to be in next year or 2 or 3 in the inflationary scenario, because my first objective target for this euro move on the upside is either close to 120, 122 or 128, 130, which is looking pretty crazy for now when you look the situation. But the charts for now, as long as we hold these levels, are telling to us that we should be careful and that we might see a reversal on the upside, especially if we go above this resistance and this wave 4. So 114.96 will relatively hammer at least 120, 118, 120 on euro for the midterm outlook. Also, what I see on some Japanese yen crosses, it's also euro yen, which is kind of potentially finished the sequence, which I've been tracking with our members for some time. And this will be on a higher time frame, a complex corrective pullback. So this is a W triangle X ABC. We reached 100% equality here, almost exactly. In this also an expanding ending diagonal. And I'm seeing a potential 1, 2 up in 3, 4, and 5. So if I see a 5-wave move from this such a strong support levels, this will indicate me that after a pullback, because the euro yen is also tied with euro, the investors and traders will be more keen to be bullish on euro yen, and this will form also some type of inverted head and shoulder, which will be nice entry on the yen longs in euro yen, also in accordance with the bullish euro. I want to see 5 waves here, definitely 3 waves pullback, and maybe I will be keen to put a small trade also here because the stop loss is small, and overall a wave count from these levels. I cannot do a big chart because I don't have enough of data to show you the all. I have, well, we have from 2008, but 2001, but this is all corrective. So I would look for 5 waves up in A. This will be a 3 waves down or a triangle or some type of a corrective pullback, and I will look for a little bit more upside in dollar yen. If you put this in a perspective of a B wave triangle here, you will get something like this: 3 waves down, 3 waves up, 3 waves down, and then you will get also A, B, C, D, and E, and then a stronger, even stronger push higher in the euro yen. If you look this consolidation as a triangle, I'm still not putting this on it. I'm interested in levels around 125, 130. Also, I will tell you one more thing. When I see a potential lows, there is a pound dollar. Although we have traded negative in gilts today, which is a historic event. Never UK bonds traded negative, and we have been negative for 10 or 15 minutes today. But what I see on this pound dollar is that from lows we touched in this ending diagonal pattern, which I think it's quite valid. We are seeing a 5 waves up, so this is an indication for me for a 3-wave pullback at least to equality, which will be here at 132, and potentially we are done. I have changed this ending diagonal. Still, it's possible we are in an expanding ending diagonal and we might have one more push to the downside. But I see a nice 5 waves up from this second wave, so maybe this is just a WXY. I'm still prepared to put the 5 waves here and look that as a flat in a 3 waves down, 3 waves up, 5 waves down in an ending diagonal C wave. But I thinking that we are coming slowly to a potential reversal also in pound dollar, and that we are going to go higher. I will show you also one more chart, and with that I will finish. And this is the Aussie dollar, which I think whatever you look and take from the higher wave count, if you take this to be a corrective one or a WXY, which I also played and have on this wave count, it really doesn't matter, because the correction on the upside will take us to above 0.8. So I'm also interested to put some longs on this ABC pullback. I'm going to wait for a B wave pullback in Aussie. This starts to become very, very bullish, and I would look for an A wave to extend a little bit higher, and this B wave pullback, I will either short-term short it or starts to wait to develop and be at least, if this is correction or a 1-2 whatever, B wave or a second wave is a potential entry. If we get a smaller 5 waves up here, then I will even think to start to label this as a 1-2, because one very good indication that you are also in a corrective pullback is if the first leg actually starts to go against your first resistance. That's a clear indication, and I see that many times, that we are in a potential only A wave, and then we're going to do just a correction. So if I see a correction from here to the downside, I will be more keen to put 1-2 here than a AB. And definitely that will be my entry for the, at least, as I said, these levels on the upside. As the crypto is concerned, we are still looking for several potential solutions here. This is a possible triangle still. We are holding this nicely, this ABC levels in a D wave. So if I see a 3-wave pullback, I want to be long Bitcoin. For a potential target. I don't want to talk about numbers, guys, because you can go enter into an endless discussion why the Bitcoin should go up. For now, technically, price is sideways, and if this is a triangle, it's clearly we're going to go up. So you can use different metrics to measure where the Bitcoin might finish. If you take a standard measuring of the first leg of the triangle in an A wave and project it from the possible break of a triangle on the upside, we're going to get some 63, 80, 100,000 targets. I really don't want to think in these numbers and say, wow, I'm just looking at technically. So what I want to see from these levels, I want to see 3 waves down, and then this is a very nice risk reward entry. From the 1-2 situation, I still think we're going to retrace. We're going to face soon a very solid resistance in this line here also, and then I will think for a pullback here in a possible wave 2, which will also be my entry on the upside. So for now, I'm bullish Bitcoin as long as technically we approve and actually solidify this 5 waves up on the end, or ABC and a 3-way pullback. As long as we hold this invalidation level around 4,000 and 5,000, I'm gonna stay bullish on cryptos for the further development on the upside. And as we can see, we are kind of climbing on the RSI up. So potentially this 3-wave pullback will be really nice to take us down to this level, and then we roar up in this orange wave 3. What is interesting also, this is what we have discussed in the members yesterday. What if we get something like this? And Terry and I was laughing. Look, this Bennett, this will be a really really a Disney World here on the cryptos. If we start to get something more offensive on the upside, I will really look for this 1-to-7 ratio. And imagine if we do this type of I mean, so all the markets will start become very bullish on Bitcoin. We're gonna get lots of FOMOs, and we're gonna get upside targets, and then suddenly we're gonna do so. These flats can be really vicious corrections.
That would be painful. And, that would be painful.
There will be. Imagine everybody's tanking on longs, and then you go, and then everybody turns to shorts because in some moment they realize we are going to go down, and they start pushing this fifth wave on the downside, and then we again return on the upside. I mean, these flats are really like monster corrections, and I find this type of corrections most dangerous one in markets.
Absolutely, that's so true. You know, the psychology behind some of these price pattern developments is it's really rather interesting to see how you do get those who are early adopters, or those who think we're into, you know, a new uptrending environment, who do go long. Perhaps they get out of some of their shorts, and just as they're going long and the market's breaking out, you've got that possible C wave in Bitcoin that sets in and breaks the hearts of every crypto investor out there. So
incredible. Let me touch gold.
Sure, yeah, let's do that.
Yeah, so as you know, we are still looking for these levels here, but more and more gold is starting to look bullish, especially if we see dollar going bearish. There is an environment where the dollar and gold can go higher, but it's very rare. So if we are in this type of a short-term 1 or 2 years inflationary scenario, which might kick in a few months, market might start to price in a possibility that we are going to go inflationary. So this will also be a channel through the gold price, euro price, and risk on price as well. A commodity going up, commodity currencies going up. So also I have looked the copper chart. This is just a 10-year yields, just to address some of the clients' comments. 10-year yields are still not out of the woods. So this as well might be a triangle, and we go one more wave down in this 10-year yields. If we go above these levels of about 142, then I can say from the Elliottwave perspective, we are going bullish. For now, I'm still going to regard this as a possible triangle for some time, and then we go down. Also in copper, you see that this is the copper futures current contract in front. So these 5 waves up, actually WXY, we are holding these levels quite successfully, and we are developing bullish structure for now. I want to see copper out of this consolidation here. Of course, a pullback is possible, but I want to see copper trade above this green line, and if we do that in 5 waves, or this is already on a smaller time frame, 5 waves, a small pullback, and we go up above that, then definitely copper was also signaling now a possible recovery and continuation on the price of the upside. So just let me go back to gold, just to pair that with commodity.
We got to wrap it up, Alex.
Yeah, I'm wrapping up. Just a small.
We got to wrap it up.
Small time frame here. So 5 waves up, possibly a flat. I'm still expecting a little bit of pullback in gold this way too. And also on silver, I'm also starting to look higher in a possibility we are in some type of higher degree flat here for this B wave, where we are starting to develop 5 wave move impulse on the upside. So sorry guys, I took some time, but many of the things to discuss here, so.
Yeah, no, not a problem. Certainly appreciate it. Thank you for the update. And guys, if you're interested in Forex or cryptocurrency, be sure to check out our website. We do have services independent of our stock options premier service. and they hold webinars in the Forex and Crypto service weekly. So Monday, Tuesday, Wednesdays, we have 3 different webinars throughout the week. So if you're interested, check it out, tradinganalysis.com. Also, be sure to give this video a like, thumbs up, and subscribe. If you enjoy the content, it kind of helps the YouTube algorithm know that, that people are here and enjoying what we have to offer. So appreciate you guys tuning in. And gentlemen, we'll see you guys next week, YouTube. Be safe. And we'll see what crazy headline the market's going to trade on today.
All right.
All right,
See you
guys.
later.
Have a good one. See you next time. Take care.